Crypto has been getting absolutely decimated over the past, several weeks. And I mean, really in the last 6 months, but the last few weeks have been particularly ugly. And things look pretty precariously perched at some key levels. Bitcoin about $20,000, which is the previous 2017 all-time high. And Ethereum about $1,000, which, is already below its 2017 all-time high and a really significant psychological level for lots of people. And lots of market participants are sitting here watching the space and going like, hey, can Bitcoin drop below this level and sort of invalidate the assumption that, Bitcoin's never going to go below its previous all-time high from another cycle. And, Ether probably, can't go back to triple digits. Well, we're going to look at that in this video and talk about some possibilities. All right. So before we get into that, if you're new around here, hey, I'm Gregory. And on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. We do these live streams Monday through Friday in this channel. Make sure you turn on notifications. You can follow me on Twitter. I usually post a live link whenever we go live. You'll get a notification about that as well if you don't see them on YouTube. Okay. So, if you're joining for the first time, welcome. And if you want to learn how to master blockchain step-by-step from start to finish, then definitely head on over to dappuniversity.com/bootcamp to get started today. It's the perfect time while the space is quiet to double down on your technical skills and break into the crypto industry. So we got people jumping in the chat here. We got Automatic Beats, Above Realty, Kodia, Anthony, Rodrigo, Dale, Tebo, Oscar. Look at the bigger picture. I like that. Bruno, Landon, Brent, Eric, Opie. Welcome, welcome, welcome. All right, so let's jump into this. So let's talk about crypto. Let's talk about Bitcoin and Ethereum in particular. The two major cryptocurrencies that people are watching like a hawk because that's what, a lot of the smart money in the space are trying to hold for the long term throughout this crypto bear market that we're in right now. And, Bitcoin is sitting right at $20,000, which is its previous cycle's all-time high. And Ether is sitting back at, $1,000, which is below the previous cycle's all-time high and a pretty strong psychological number. And so we've seen a lot of really large buy pressure at these levels, trying to defend them for the sake of, really the space. There's a lot of people who have tons and tons and tons of money in this stuff. And, if these levels break, it could get really bad. So let's talk about, will these things hold? All right, so let's kind of analyze it in two directions. You have to think about, why do numbers go up and down in the first place? It's a supply and demand based market. So what are factors that could cause the price to go up? What are factors that could cause the price to go down? So first of all, like I was saying before, there's a lot of strong support at these levels in terms of buy pressure, but what could cause that support to break? Well, these are reasons that could cause these things to go below $20,000, and they fall into two major factors, okay? So number one is, the price action that we've seen in crypto over the past several months is definitely not a crypto-specific problem. This has got, a bigger deal with the broader economy. I don't pretend to be a macroeconomics expert by any stretch of the imagination, but it does not take a genius to see that inflation's a problem, that whenever, the Fed raised interest rates or started talking about raising interest rates at the end of last year, that really sent markets into a panic, and everything. Crypto stock market has had some serious headwinds, okay? So, crypto has been pretty correlated with the stock market over the past several months in terms of its downward trajectory, okay? But crypto has been taking a beating a lot worse than stocks for a few reasons. One, crypto is generally a riskier, investment. It's a higher beta. And so even compared to some tech stocks, like, people are going to say, hey, crypto is riskier than these types of things. And so if we're entering into a risk-off environment, then we want to take less risky bets. And crypto is kind of the tail end of the risk curve. So that's definitely one reason, but also we've seen some crypto-specific problems. We've seen, stable coins blow up. We've seen hedge funds getting liquidated. We've seen all these other types of things like Celsius, disaster. And those things have each time that they've happened have sent crypto farther down, each rung in the ladder. Okay, so let's kind of break down all these things and talk about the perfect storm that's happening for crypto, and to wonder, can we survive this, and can we actually hold these specific levels? So let's start with the macro economy. Okay, so with the stock market in particular, we are entering into a time where things are looking pretty rough. Okay, so I was looking at this chart that came out a little bit earlier. So a quick take on the technicals. Signs of capitulation are starting to show. We can see it here. Okay. This is with the S&P 500. I've seen some charts where we were, looking at these. I'm not a huge technical analysis guy, but you could easily draw a wedge on this that looks like it's about to just like puke its guts, especially with the sell volume that we're seeing here. Okay. So actually, this is not sell volume. This is the percentage of members with 14-day RSI under 30. Anyways, like I said, not a huge TA guy by any stretch of imagination, but I do think that there's a lot to that, right? That you could see a nasty move in the stock market. I see a lot of people sitting on the sidelines saying, hey, we haven't seen VIX numbers go over 40, which is typically what you see in like a massive stock market capitulation. So if we see a capitulation in the stock market like this, then that's definitely enough force to bring greater downward pressure on ETH and Bitcoin in particular that could cause them to break through those levels. All right. So that's definitely something to watch out for. If stock market sees a nasty capitulation, we could be in for a pretty bumpy ride that could bring crypto below those price levels. Okay. So the other thing are crypto specific problems. So let's say the stock market bottoms here. I'm not saying it's going to, but let's just use a hypothetical scenario here and say we found a bottom in stocks, stocks start to recover from here. Well, crypto could still have its own slew of problems to sort out. Okay. So let's talk about what those are. Well, again, we've seen a really nasty set of issues like, Terra Luna disaster where this algorithmic stablecoin blew up. All right. And whenever that happened, we saw crypto just knife down, so much harder than stocks did because it's a crypto specific problem. Whereas, what's going on in the economy is not a crypto specific problem. We saw the issue with Celsius, previously the past several weeks where essentially, Celsius is a savings and lending platform, a centralized savings and lending platform that offers people yield savings rates on things like Bitcoin. Basically, you deposit your Bitcoin, earn, interest for doing that, right? And then they're using a variety of strategies, including, depositing that in decentralized finance to sort of arbitrage that yield for you. Okay, so I've seen lots of issues with Celsius, people not being able to withdraw their funds, going under liquidation prices. Okay, and then the next major thing is what's happened recently with the Three Arrows Capital situation. So all the details of this are still coming out, okay? And really the latest on this is that a lot of their positions have been liquidated by major exchanges like FTX, Deribit, and BitMEX, okay? So if you're not familiar with what's going on with this situation, basically, Three Arrows Capital is a major crypto hedge fund, and basically, they've been wobbling as $3 billion has seen a set of liquidations. So with the combination of what's going on with Celsius, with the Terra Luna disaster, and also this mass liquidation, what this really proposes is basically contagion risks for other aspects of crypto, because essentially what goes on is you have all these things that are dependent upon one another, where somebody else is loaning somebody else money, somebody else is loaning somebody else money, and then when they can't pay those debts back, it affects the people who lent the money out to them, and then they are maybe indebted to somebody else, and then you basically have this set of circumstances where this takes time to unwind, and it effectively like breaks the system, and you might have people have to sell off large amounts of crypto in order to pay back certain positions, which adds additional sell pressure onto the assets itself, sometimes even just on the open markets, and causes the price to tank. So, with either one of these scenarios, whether what's going on with the broader economy or even what's going on with some of these crypto-specific problems and this risk, kind of fiasco that's unwinding and this contagion risk that starts to spread, either one of these things could potentially, push crypto below those price levels that are being defended right now, like $20,000 per Bitcoin and $1,000 per Ether. Now they could. All right? I'm not saying that they're going to. I'll be very clear on that. But what I am trying to potentially guard against is, just the hopium that these psychological price levels that everybody thinks they can't fall below. That there's some sort of like programmed destiny, but like there's lots of reasons why they could potentially break below those levels. Okay. At the end of the day, nobody really knows exactly what's going to happen next. Find somebody who accurately called the double top on Bitcoin in 2021, all right, with any degree of accuracy, and then see if that person, if you can find that person, I still have an open invitation. I've been talking about it on my channel. Somebody just email me exactly who that is, because I want to interview them on this channel, and then I want to find what they think about the bottom for the crypto markets right here, because it's incredibly hard to call. So let me know what y'all think down in the comment section below. Do you think that we're going to hold $20,000 per Bitcoin? Are we going to hold $1,000 per Ether? One potential situation is we could even hold 20K per Bitcoin, and we could watch Ether, fall into triple digits. All right. And if we do get in that territory, there's lots of people who are wondering, would that be a quick trip to those levels? And could we potentially, would that be the final capitulation that sends us back above those price levels and sort of resets the game to where you get a lot of people who are able to get those massive orders filled? That is a possible scenario on the table too. And if we saw that type of thing, correlate with a capitulation in the stock market, then that potentially could mark a bottom. But, bottoms are incredibly hard to call. I don't think there's any real benefit to accurately timing the bottom because, it's just so unlikely that you're going to sell that you're going to it's actually pretty likely that you're going to sell the bottom, statistically speaking, but it's very unlikely that you're going to buy the bottom perfectly, because that's a lot of people think. They're like, all right, crypto is easy. Like, I'm just going to find the bottom, I'm going to put all my money in it, I'm going to wait for the tippy top on the chart, and then I'm going to sell it. Like, nobody does that. No, not a single person has ever done that. Maybe one person, and then maybe they did it with like $100 or something like that. But there's always the allure of like, I'm going to take my entire life savings and multiply it an infinite amount, or use leverage or something like that, which you should never do. Again, I don't really give financial advice on this channel, but I am okay with telling people to be safe. Just stay away from leverage trading. You get a lot of people that get blown up that way. So I don't think it's really even trying to beneficial to guess exactly how low Bitcoin and Ethereum are. So again, not financial advice. Like, for me personally, like my positions that I'm holding on to at this point, like, it's already fallen so far that, like, unless you absolutely needed to access some of those funds, there's almost like no point in really taking it out. Again, not any financial advice for you. Your situation would be totally different, but that's kind of how I feel about my positions that have fallen since the peak. So at the end of the day, like, I'm super optimistic long term on crypto. We don't exactly know how long this is going to last. I think a lot of this was definitely brought on by the broader economic change, because fundamentally what happened was we had an entire change in monetary policy that just completely changed the environment. We were in a low rate environment for a really long time, and then in the fastest change, to my knowledge, that we've seen, at least in recent history, the fastest change was boom. We went into a kind of like medium rate environment. Again, somebody who's much more versed in macroeconomics could say whether this is a medium rate. It's high. It's high compared to what we've been historically over the past several years. Okay. The current federal funds rate is not high, right? But what I'm saying is the rate of change in which we've changed course on interest rates is pretty fast, and the rates are a lot higher. Especially things like mortgage rates are they doubled, right? They're pretty close to historic averages and norms over a long period of time, but the rate of change is the real issue, because we have an entire system that's built upon cheap debt, that's forecasting growth, and really we pump the brakes on all that type of stuff. And so when you have a system that works a certain way, then you instantly change how it works, then things start to really get shaky and fall apart. And that's the kind of a lot of people are sitting there wondering what's going to happen with the broader economy. What's going to happen with the stock market? What's going to happen with crypto? Because a lot of this feels like it's the fate of the Federal Reserve. We've got basically that's what sort of popped the bubble in the first place was, hey, we're going to raise interest rates, and then markets started to freak out, started going down. And there's a lot of people that think that, Fed is essentially going to force a recession, and then whenever the recession comes into play, whenever there's enough damage and demand destruction, which looks like is the goal, that they would, maybe pivot at some point, right? Like, all right, well, we're gonna stop raising rates. We've kind of done our job here. We've racked the shotgun. We've broken the economy, and we're gonna start the game over again. And if that happens, then that would be painful in the short term, but that could be a force of nature that, kind of starts the crypto markets back up again. So yeah, at the end of the day, like I was saying, we've got so much amazing stuff that's getting built in the space. Follow the developers. That's really how you find out where this space is going. At the end of the day, that's what I try to teach you on this channel, is how to learn the skills and break into this industry. Definitely go check out my YouTube videos on my homepage. They're pinned there. They're like Udemy courses, but they're totally free. Okay, because right now is a perfect time to be doubling down on your skills while we're in this sort of quiet time, because most people are getting into crypto, trying to make life-changing money off of trading crypto. Trust me, that's how I got interested in this space in the first place, by watching cryptocurrency prices go up. But as I sort of looked into it and found the technology, I was like, hey, this is game-changing stuff. I was already a developer already before I got into blockchain, but once I got in, I was like, man, this is it. And I got in in 2017, and the bubble popped, just like, it has recently. And I doubled down my technical skills during those, quiet years, and like built up my YouTube channel. And man, that was one of the best decisions I ever made. Okay. So this is a perfect time to do it. And, ultimately the technology is what brings new people in. Okay, so we've got a ton of amazing stuff that's getting built right now. Saying follow developers. That's ultimately what makes progress in the crypto space. And the developer metrics are really high in terms of people who are, creating and shipping things. And that's what creates demand for the technology. And as we have more technology that has more demand, that's what brings in more users, which enhances the network effect, which ultimately will, in my opinion, be the highest, be the metric with the most correlation for crypto adoption, and also crypto price trending higher over time. Crypto is a very volatile asset, but for so many different reasons, I highly expect it to trend higher over time. And adoption is one of the key metrics that I think is correlated with that. And developer growth and developer metrics are the things that are very highly correlated with adoption, because they're the ones that create it. The builders, the builders. You definitely want to be a builder in this space. That's where the most opportunity is. Because also when you're a builder, you're so close to the technology, and you find out about the game-changing tech before other people did. I mean, I was sitting there watching DeFi blossom, late 2019, early 2020. Things like Aave and Synthetics came out, Compound Finance, all right, and started to rip off. I mean, the Aave token and the Synthetics token were two of the first tokens to really make explosive gains, like 100x gains, before anything else did in the crypto space. And then it all took off. And if you were sitting there going, oh, wow, like a savings and lending app, on blockchain powered by smart contracts, that makes a lot of sense. You would have seen that, and you would have been there early. So same thing with Compound Finance. Compound Finance was one of the first applications that I saw, really take off. Whenever I got in the crypto space in 2017, and then, the bubble popped, and we were sitting there in 2018, we had smart contracts, we had ICOs. We kind of knew ICOs were probably not going to last forever. All right. And, we were like, okay, Ethereum's awesome. Smart contracts are great. We know it's the future, but we're not exactly 100% sure what we're going to do with it. And I remember when I saw Compound Finance for the first time, and I was like, oh, wow, this is amazing. You know what I mean? This is where things are headed. And I firmly believe that we're getting close to finding what those new things are. We already have the seeds planted for so much of that stuff. And by getting in it and working with the technology, you get a first row seat at all that, which is really, really, really exciting. Somebody says retail investors will not get us back to previous price levels. Yeah, it's not just about retail investors. Somebody says, I don't think crypto analysis is really matters that much. Wait for stocks to capitulate. That makes sense. Just smash the like button. Yeah, definitely smash the like button. That really helps these videos out. YouTube likes to show it to more people. Whenever the like button gets smashed. Win Lambo. Well, I think, like I said, I'm not trying to call any bottoms, but, I think there's a lot of people, I think there are definitely buying opportunities right now that will make Lambos in many years to come, but I'm not telling anybody to buy right now. That's not what I'm saying. But I do think that we're closer to a bottom than we are the top. It's just, sort of a game of chicken. Like, who wants to do it? Things could get really ugly. And I think there's a lot of fear in the broader economy. Because the whole thing about crypto is like it's always like put money in you don't need now. But I think the big fear for a lot of people is like, well, what if I need this money? You know what I mean? If we go into a nasty recession or I get laid off or I have an emergency, you know what I mean? Like, I don't want to have all my liquid cash in crypto. So I think that's a lot of the fear right now. And it's a valid concern, right? I'm not blaming anybody for that. Somebody says, let's say a prayer for poor Jake Paul, who's apparently skint. I think I did see something about that. I'm not trying to make light of anybody getting wrecked in crypto. I mean, it's pretty painful. What's the difference between a blockchain developer and a blockchain engineer, or are they considered the same thing? I mean, you might see people who try to draw sort of like pedantic like differences between the two, but it's basically the same thing. It's like a software developer, software engineer. People use them synonymously all the time. You might find somebody says, "Well, this is technically what it means," but if you look at job postings, like you're gonna find, you'll find the exact same job description with the same title twice. Like you'll see something that says blockchain engineer, same job description, something says blockchain developer. Somebody says WordPress dev equals definitely not software engineer. Yeah, I get what they're saying, but what I'm saying is like, I get what you're saying. Like, if you're just customizing WordPress sites, you don't have the same skills as somebody who can architect a full stack application from the ground up. Yeah, I guess that's technically true. But what I'm saying is, like, somebody who can architect a software application from the ground up, you could call that person a developer or you could call them an engineer. I don't think it really matters. I mean, I think saying something like a WordPress developer, like that's a very specific skill. So like just call that person a WordPress developer. Somebody says, is it going to be harder to land a blockchain developer job right now? Coinbase laid off a lot of people. So I'll put it this way. For every company that has had layoffs in the space right now, there is an equally sized company, at least, who will hire for the same number of roles. So like, we basically, because I've seen this, a lot of people are worried that like whenever crypto prices go down, that like, you start to see companies lay off. What does that mean for, industry jobs? So, I mean, like I said, for every company that has had major layoffs, we've got companies that have massive amount of openings. I mean, crypto giant Binance opens 2,000 positions. And basically this was in direct response to what happened over at Coinbase. So, CZ was like, he was basically, basically kind of calling them out, and it's like, it was not easy saying no to Super Bowl ads because Coinbase did Super Bowl ads. And I'm not hating on Coinbase. I'm not promoting Binance by any stretch of imagination. I'm answering the question here. I think both have done amazing things for the crypto space. Stadium naming rights, large sponsor deals a few months ago, but we did. Today we were hiring 2,000 open positions. So yeah, I mean, you can even see those jobs here. You can look at, if you just look at Binance job openings, let's just see here. 925 results found. So I'm sure they don't have all 2,000 listed right now, but they might be hiring for multiple, and maybe that accounts for the double counting for 2,000 open roles. But I've seen this. I've seen people float around and be like, hey, Coinbase layoff affected me. I'm looking for a new thing. And then like instantly in their Twitter reply, there's like 20 people saying like, hey, we'll hire you. So the other thing is, I was down here, I was a developer in 2018, 2019 when the space was much, much smaller, like much, much smaller. And you had like crypto companies like who raised ICO funds that were basically going bankrupt, and like, they were kind of sketchy startups. And some of those, definitely had issues, but in aggregate demand was still really high for developers. Okay. And it's still going to remain really, really high. So if you work at a sketchy startup or something like that, that has mismanaged their money, there might be some issues, but you probably have a sense of that already. Right. And I saw somebody the other day on the live stream was like, hey, but Coinbase is not a sketchy startup, but they grew too fast at the end of 2021. It's not a diss on Coinbase. That's just what happened. You know what I mean? Other companies did the same thing. They grew too fast. They had layoffs. There were consequences from that, but aggregate demand for developers is still really high. Somebody said that photo from CZ is they photoshopped his head onto a stock photo. Let's look. They might have. Let me go find it. Oh yeah. I think you're right. That's awesome. I think they did Photoshop his head. That's awesome. Somebody says, hey, I want to thank you so much. 15-year-old son is studying courses from Italy, and it's becoming so proficient in software developing. I'm amazed. Do you have any suggestions? Yeah, it's awesome. So keep up the good work. The best way to develop his skills is to start creating his own project, and just use your imagination and build something from scratch and put it out there for people to use. And if he's 15, keep doing that. And you build up enough skills, and you'll be ready for a job without even needing to go to college if you don't want to, or university, whatever you call it over there. Somebody says, how crazy is it to look for internships at the age of 26 just to have an opportunity to gain experience in the Web 3.0 field? So you could definitely do that. But what I would do is try to go somewhere where you can offer value. Even if you are looking for an internship, like I would still learn skills and then create a portfolio and show what you can do. Okay. Because the last thing you want to do is just show up and be like an unproductive intern that they don't really have use for, because like nobody really wants to just drag somebody around who's not like helping them. Like they don't want to just eat up their time. So showing that you understand the space and can provide some sort of value, even if you're going into an internship, that's going to help you better prepare yourself for a good opportunity. So I would still go through the same process of what like developers who are trying to get more heavyweight developer jobs are doing, which is what I recommend, which is basically to learn the skills, create your own project, put it in a portfolio, and then start, hustling for opportunities. And that's exactly what we teach you to do, on the YouTube channel. So definitely go to my YouTube homepage. You can find those free courses there. They're like Udemy courses, but they're totally free. And if you want to go for the throat and execute that exact plan that I'm talking about, learn the skills, create your own project, create a portfolio, go out and land your first blockchain job, whether it's an internship or more heavyweight developer job, then definitely head on over to dappuniversity.com/bootcamp to get started today. So that's all I've got. And until next time, thanks for watching Dapp University.